Hi traders, in this video I will talk about an Elder's Force Index strategy. It is an oscillator, and with this oscillator we can confirm rising prices, falling prices, breakouts and divergences. And in my opinion, this is an indicator that is overlooked by many traders, but it is actually a great one. And so I coded a strategy with it because I realized that I want to experiment with this indicator and how I can turn this indicator into a profitable strategy, of course with dynamic exit rules and with my favorite exponential moving average exit strategy. And so I coded that and it turned out to be a really good one. Now I will show you some examples on the USD and Japanese yen chart. Just to quickly mention Alexander Elder, who created this indicator. He is a psychologist and it is just, in my opinion, very eye-opening, because most traders don't realize how important psychology is to actually be a profitable trader. They think that a big ego will lead to a great success in trading, but that is not the truth. If your psychology is not strong enough, you will blow your accounts because you will move your stop losses, you won't follow your own rules, and therefore statistics won't be on your side. Now let's see what this strategy is all about. So first I will show you a USD Japanese yen example on the 1 hour chart. What are our entry rules? We will take a buy trade. As you see, it is a pretty good buy trade, and in my opinion it shows that this strategy just follows some short-term trends and rides a good. So for example, here it made more than 300 pips. That is, in my opinion, very good, because our safety stop loss is only 66 pips. So the overall strategy has a great risk to reward ratio, and I will show it to you at the end of the video. Now our first rule is that when the EFI, the Elder's Force Index, and it is really important that here the force index period should be not the default, which is in trading view 13, but 83, and it works much better than the lower period ones, because for long-term traders, for serious traders, the default one is just too small, and therefore I use the 83 period, and the algorithm that I tested this strategy with, I coded the same period. And so the first condition is that when the EFI 83 period crosses above the zero line that you can find here exactly where I show you, if it crosses that, then you take a buy trade. We have no other entry rules, because the force index, based on my test, did so well combined with the EMA exit strategy that I didn't want to just combine it with other indicators. Of course, I will do it in the future, but for the first force index video, I want to show you a pure force index strategy. We took a buy trade, and our exit rule is actually really simple, because we exit the markets when, and this is our first condition, we have 3 conditions. We can exit the markets when a 20 period exponential moving average crosses below a 40 period exponential moving average. It is important to note that the second condition and the first condition has to be the right place at the same time, because our second condition is that you have to wait 3000 minutes after the entry, and after the 3000 minutes, just only after the 3000 minutes, you can actually start to look for the exit strategy, so the first condition, and when the crossover happens. For example, if only 2000 minutes passed, but there is a great crossover for the exit strategy, you can't close the trade, because this is the rule and it is tested. Of course, if you don't want to use my rules, then you can establish yours, but then follow your rules. So the most important thing is to not break them during a trade. You can establish new rules before you start to trade, but not during a trade. It is important to note that it doesn't mean that if the cross doesn't happen, then you will hold the trade forever, because we have a third condition, and that is the safety stop loss. The safety stop loss give us the good risk to reward ratio, because we have a 66 pip safety stop loss, and we have with this safety stop loss a more than 1-to-1 risk to reward ratio. So we are not scalpers who are most of the time using insanely bad risk to reward ratios, and therefore they lose all statistical advantage over the markets, and that is not good for any trader. We are using good risk to reward ratios, and so I tell you the rules one other time. So the entry rule is for the buy trades. We have a force index that is 83 period. When the 83 period force index crosses above 0, you take a buy trade. We have a second rule here, and this is that you only carry one trade at once per currency pair. So if the force index crosses the 0 line 200 times or even 2 times, you will only take the first trade and wait until you close the trade, and only after that you can open one. This reduces losses by 80% based on the statistics. So it is just an important rule to not overtrade. Then our exit rules are the following. First, when or if a 20 period EMA crosses below a 40 period EMA, we can close the trade if 3000 minutes has passed since the entry, or we can close the trade if the 66 pip stop loss was triggered. These are our rules. Now I show you the sell entry and sell exit rules. The sell trade rules are really similar to the buy trade entry and exit rules, of course, and now I tell you all the details about them. So first of all, you will need an Elder's force index, but with a different period than with the buy trade entry. And it is because buy and sell trades are so different in every market and in the Forex markets too. Most people don't recognize that the same numbers for the buy and sell rules won't be as efficient as if you try to find good periods and parameters overall separately for buy and sell trades. So here we will have a 73 period EFI, and our rule is that when the 73 period EFI crosses below 0, then we are taking a sell trade. And as you can see it here, it just crossed below 0, so we could take the sell trade. Of course, here we will have the same set of conditions for the sell exit as we did with the buy exit. First, we will have a crossover, and the crossover is that when a 5-period exponential moving average crosses above a 20-period exponential moving average, we can close our sell trade if 1500 minutes passed after the entry. With the sell trades, we have half of the X minutes parameter, as you recognized, and that is because it turned out to be much better for the sell trades. It is another reason why I always recommend to use asymmetrical strategies, and coders wrote to me that it actually works, and since they develop EAs with asymmetrical strategies, the results are much better. So the stop loss will be the same as with the buy trades. Most of the time it is not the same, but here it seemed great with the same stop loss, which is 66 pips. It is probably because the exit parameters and the entry parameters are so different than with the buy, entry and exit parameters that a stop loss can be the same and it can work great. So I will tell you one more time what are all the entry and exit parameters. So for entry we have one rule. It is when the 73 period EFI crosses below 0, we take a sell trade. And the additional rule is that we have to only carry one trade at once per currency pair. So if you are trading with 5, the maximum number of trades in your account at the time is 5 trades. If it is one currency, it is one trade. And so if the EFI fluctuates over and over again, it crosses above and below 0, you don't take the trades if a trade is already in place. So the exit parameters are when the 5-period EMA crosses above the 20-period EMA if the 1500 minutes passed or the stop loss gets triggered. These are the rules. And here is the trade, of course. You can see that it is a pretty nice trade. It is approximately 42 pips, so it is not a huge trade, but I always want to pick trades, for the example, that are not the biggest, best trades, because that would be, in my opinion, just not a great way to establish a good communication towards, you know, traders and watchers and towards statistics on average. I know most people do that, but I don't want to bullshit. I just want to show real trades and pick real trades that are actually doable and not the extremely good ones. So here we are, and I show you all the statistics of the strategy. The statistics are the following. We have an approximately 1-to-1 risk to reward ratio. It is a bit higher than 1-to-1 risk to reward ratio, and that is good for us, and especially with the fact that our profit trades of total is almost 70%, and that is really good, because that means that, for example, from 10 trades, on average, based on statistics, it wins 7 trades and only loses 3 trades. Each of the 7 trades are bigger than each of the 3 trades, so it has an advantage over the market. And the largest profit trade is 230%, and the largest profit trade is much bigger. It is more than double the amount of the largest loss trade. That means that the dynamic exit works great, and so it is good that we are not just using a stop loss and a take profit. It is important to read the statistics correctly and know what means what. So for example, that the largest profitable, largest loss trade, from those data you can actually analyze if the dynamic exit is healthy or you should improve it. The consecutive wins are 3 and the consecutive losses are 2, so that number is pretty good as well. And so the maximal consecutive wins are 9 and the maximal consecutive losses are just 4, and that is an important number as well. Now, of course, you can pause and just calculate the statistics, and you can do any kind of mathematical calculations with it if you want. I hope you enjoyed this video, and if you want more videos with the Forex Index, subscribe and leave comments about it. Ciao.